Have you ever heard the terms assets and liabilities and wondered what they really mean? In the world of finance, understanding the difference between these two concepts is crucial to building long-term wealth and financial stability. In this video, we'll take a closer look at the differences between assets and liabilities and explore some strategies for generating assets that can help you achieve your financial goals. Whether you're just starting out on your financial journey or you're looking to take your wealth-building efforts to the next level, understanding how to create and grow assets is an essential skill. So let's dive in. First of all, let's understand what assets and liabilities are and what's the difference between them. What are assets and liabilities? Assets and liabilities are two fundamental concepts in finance and accounting that everyone should understand. In simple terms, an asset is anything that a person or business owns that has value and can be used to generate income, while liability is any debt or financial obligation that a person or business owes to someone else. Assets can come in many forms, such as cash, investments, real estate, and even intellectual property, while liabilities include mortgages, car loans, credit card debt, and business loans. It's important to note that not all assets are created equal. For example, real estate and stocks can appreciate in value over time, while a car or a boat typically loses value over time. Furthermore, some assets are considered tangible, like property and vehicles, while others are intangible, like patents or copyrights. By understanding the difference between assets and liabilities and the various forms they can take, individuals can make informed financial decisions and build a solid foundation for their financial future. Difference between assets and liabilities. The main difference between assets and liabilities is that assets add value to a person or business's financial position, while liabilities take away from it. Assets can be used to generate income, while liabilities require payment and can potentially add financial burden. Understanding the difference between assets and liabilities is crucial in managing personal finances and building wealth. It's important to focus on acquiring assets that can generate income or appreciate in value, while minimizing liabilities and paying off debt. This can help build a solid financial foundation and increase financial security over time. Are cars and houses assets? Cars and houses can be assets or liabilities depending on how they are used. If a car or house is being used for personal use, then it is a liability because it requires ongoing expenses such as maintenance, insurance, and property taxes. On the other hand, if a car or house is being used for generating income, such as renting out the property or using the car for a ride-sharing service, then it can be considered an asset. When determining whether a car or house is an asset or a liability, it is important to consider its overall financial impact. For example, a car may be necessary for commuting to work, but it will still require ongoing expenses that could offset any potential financial gain. Similarly, a house may appreciate in value over time, but it will still require maintenance and upkeep costs. What are tangible and intangible assets? It is important to understand the difference between assets and liabilities because it can impact financial decision-making. Investing in assets that generate income can help build wealth over time, while accumulating liabilities can result in financial strain. Sure, tangible assets are physical assets that can be touched, seen, and felt, such as real estate, machinery, and inventory. These assets typically have a finite useful life and lose value over time due to wear and tear, obsolescence, or depreciation. On the other hand, intangible assets are non-physical assets that are not visible or touchable but hold significant value, such as patents, trademarks, copyrights, and goodwill. These assets are more difficult to value than tangible assets and often require specialized expertise to assess their worth. The main difference between tangible and intangible assets is that tangible assets are physical in nature, while intangible assets are not. Additionally, tangible assets can be readily converted into cash, while intangible assets may require more time and effort to monetize. 2 ways to make money with stocks. There are 2 main ways to make money with stocks: capital appreciation and dividends. Capital appreciation is when the value of your stocks increases over time, allowing you to sell them for a profit. Dividends, on the other hand, are a portion of the company's profits paid out to shareholders on a regular basis. Both of these methods can provide a solid return on investment, but it's important to research and choose stocks wisely to minimize risk and maximize potential gains. Is knowledge an asset? Knowledge can be considered as an asset. In fact, it's often referred to as an intangible asset. It's not something you can physically touch or see, but it has value and can be used to create wealth. The more knowledge you have, the more valuable you are to potential employers or clients. For example, if you have a specialized skill or knowledge in a particular field, you can use it to offer your services to others, either as a consultant or as an entrepreneur. Additionally, acquiring knowledge can also help you make better financial decisions, which can increase your wealth over time. Understanding the difference between assets and liabilities and how to generate assets is crucial for financial stability and growth. By acquiring the right assets, you can generate income and increase your net worth over time. By balancing your portfolio and continually educating yourself, you can set yourself up for long-term financial success. Well, now it's time to end the video. Thank you for watching, and we hope you found this information helpful. Feel free to ask any questions related to these in the comment section, and don't forget to subscribe to our channel for more informative videos like this.